What's up, everybody? It's your boy, FaithintheSTRAT. I wanted to do a little quick session on Strat ICT, give y'all some tips on how to use it and how I've been using it. So the setup I use currently with it, I still use my broadening formations. I use that obviously to set up my day, my week, any time frame I'm on. So like right now you're looking at a daily one. This one looks like it was started the 29th to the 30th. So it was like mostly throughout the week I used it. So I use that to set it up. So the main things I tend to look for after I have my BFs or even before is I like to look for the liquidity. That's what these signs are. Buy side is at the top, sell side is at the bottom. Liquidity is really just areas of highs where you'll see either a few multiple highs that haven't been ran through or that have like equal highs. These are just levels that traditional retail traders are going to be putting their stops or seeing as resistance. And we use those because usually what happens is price gets driven through those. So people think it's a breakout, it reverses, and that's how they can liquidate them. So there's buy side and sell side. When I say like external, I'm just talking about the bigger time frames, like the daily and weekly, versus when I'm talking about internal, I'm talking about like usually intraday or within the day. So that's the first thing I'm looking for. The second thing that I pay attention to is fair value gaps. Fair value gaps are three candle patterns. There's a first candle, a second, and a third. That's how they're created. And it's this imbalance or level of difference between the candle where there's just body. The reasons it's an imbalance is because normal price movement has it to where buyers and sellers are kind of equally distributing price, versus when you create this imbalance right here, it pretty much shows there was no this sell action was so aggressive, but there was no buyers. So usually what happens, a candle like this is created, then this next candle is going to retrace and it's going to try and fill some leftover buy orders. But when we imbalance like this and it continue to sell off, it imbalances the market. So it creates like leftover orders and kind of like a vacuum. So I use fair value gaps kind of like as in a sense like resistance. Or I just look at it as an area of like, once they're first created, that area that I expect price to kind of launch off and then come back in to try and grab leftover orders. So you can have smaller ones like on this 5 minute, or you can also have bigger ones like on this, this was on an hourly time frame. So we had this one that was created, go back in time, at the day, or on the hour, it was like this. And then it started getting poked into by these candles as the days went on. Then if we were to play it, you see price pushes into them to collect those orders. We expect the price to usually retrace into them and then to reject, only to later on in time come through and completely fill out this fair value gap or mitigate it. Outside of fair value gaps and imbalances, another thing I look for, especially as I'm trading, you'll always see marked, I'm looking for like the high a day and low a day, which this one I had was like way down here. The high day, you never know for sure, but I kind of just have a bias because since we're in a bear market. So like as the high is forming, I'm usually marking a high as high day until I start to see a rejection. So if we keep pushing through it, I just keep adjusting it. But I'm always looking for the high day and low day. And I'm matching that with the high of week and low of week because I want to know where we are. Because if I know I'm at the high of the week, and I start to see a rejection, I'm already thinking in my head that we're making the wick for the week. Like if it's the first day, if it's a Monday and we make a high, and then we, let's say we have like a 2-2 on the 2 hour, or an aggressive 4 hour 2 down. And I see that like it's pushing, setting up a bearish setup for the next day. I'm like, okay, that was the start of the candle for the week. And this first day already was the high or the current high of the week. So yeah, let's see what else. Oh, another thing, break of structures and change of characters. So this is kind of just has to deal with the structure of the market. A break of structure happens when we're in like an up or down trend and you create a high. It's almost kind of like a TTO, but it's realistically, it's just breaking this pullback and continuing in the direction. So it's like breaking the structure, but continuing in the direction of the trend. So they kind of look like this, which is what I drew. So you see we made a high, pulled away from the high, and then broke through. We broke this previous high and continued up. So that was the structure, because that was the high that we broke through. Now, change of character is a little bit different. They're kind of similar things, but a change of character changes the trend. So change of character will change us from here, where we were in a downtrend, to here, we convert to an uptrend at this level. I'm not really good at marking them perfectly, but it's pretty much an area where price action tends to move from, like right here, we're bearish. We break this high and it turns to bullish. That's what, like, here's a kind of a better example. If you look on like Forex and Forex dictionaries, you'll see a lot of diagrams. They're probably better than mine. I made this on the fly. Yeah, and the last one I look for is order blocks. So order blocks, they're the last series of down close candles right after your break of structure and your fair value gap. So like right here, we broke structure. We created a fair value gap off of this candle. So at the time, it was like this. And then these candles started filling into it. We actually broke all the way through it at one point. The down close candles before are your order block. So that's usually like one of your best possible entries. They usually happen, or they have to happen in areas of like supply and demand. So yeah, those are the main methods I use with ICT. And then I use his 2022 model, his sell model. That's all I've been really using, which is literally just pretty much a break of structure, the imbalance, which creates the fair value gap, and retracement into it. I'll use it bullish or bearish, where there's a fair value gap, and then you expect to see displacement below, and then you see a retracement into it. This one wasn't like the best example, but usually it'll pull up much higher, and you expect a rejection. I just take those off highs of days and lows of days, and I just realized that the market is constantly trying to move from buy side liquidity to sell side liquidity, and it's always targeting. I'm always using imbalances as my first targets. So I combine that with the strat and what we know of higher time frames, and that's how that's pretty much how I trade it. That's it. It's nothing special. Nothing extra. All right. Do y'all have any questions? You can put them in the chat. Nobody got any questions? Order block, yeah, usually your order block, to my knowledge, is right near the FVG. I think it's the order block is like right on top of the FVG. But yeah. There's actually two an indicator you could use to help you find them. Now we're on it, I forgot. I use it, sometimes it's a little off, but especially when I first didn't really see them. You can go to order block finder. I actually have it. So let's see. And it will show you where, so that like this one was correct. There's an order block right there. There's one right here, the up close candle before the move. It's usually the reverse candles. Or if you watch, I think it's in episode 2. it was either episode 2 or 3. It's at the like 14-minute mark. He gives a brief explanation of it. Another thing you can use is the fair value gap indicator by nephew Sam, and it can highlight them for you if you have trouble seeing them or drawing them. So it'll be FVG, nephew Sam. And like with mine, I have my settings minimal. So instead of having all the time frames highlighted, I just have the auto time frame, and then I deleted the writing because I didn't want the writing, you know, the 14, 15. I have my link boxes set to, I think, standard, but you can adjust them. So you can set them to, if you want it, like 80, and it'll make them longer. Like it'll pretty much just make them so that they stretch across the screen further out. They reach out further, which is cool if you want to mark them. A lot of times I'll just have it on, and then I'll turn it on and off, and I'll just draw the gap, and then I can like extend the gap across like that. Yeah, okay, let me see. No problem. Do you mainly find the most success on SPY, or do you? Yeah, I use it mostly on SPY, like the indexes, because they're more liquid. You can use it on like anything that's really liquid from my experience, but I mostly just use it on, you know, SPY, QQQ, ES, because those are so liquid and there's so many people trading it. The tight spreads, you can get in and out, and there's a lot more handles in the day on something like SPY. There's a lot more up and down movement that, you know, you can get in between than most stocks. Do you use the US 500 chart? No, I don't use the 500 chart, really, to be honest. I just use, my favorite chart is just the futures chart, so S1 or ES. I tried the 500 chart. I mean, it's all the same shit, realistically. They're all, the price action will be identical. But I just don't really use, I use 500 like for like a few days, but they're all, you could SPX 500, SPY. There's another one actually. It's all identical, just different numbers. Yeah, off the previous day's highs and lows for BFs. I draw BFs like off all time frames, so like they exist anywhere and at all times. You can draw them on micro or macro. I usually have a much bigger one, and then as the day is forming, like if I don't, like you see here, this day, I kind of already had, well, this is from close hours, but let me do like on SPY. This same BF from the beginning of the day, we just stayed within. So I knew externally we had this much larger broad information. Then like on a smaller time frame, like a 5, something like that, if I was struggling, I could draw out my BF, but I knew we were coming back up and down through this major BF. So usually I don't have to when I'm within it. Like I'm just patient and expect us to come, you know, test the highs and lows. Like, you know, make the high, we make the low, we tag the high, we didn't really take it out, but reject it, make it slightly lower low, higher high, lower low, higher high. It just happens over and over. Low, take it slightly lower low, a high, we hit this fair value gap, made a lower low. So what I like about understanding the fair value gaps, it kind of helps me see like why sometimes with a BF, we don't touch the other end of the range. What time frame you use FVGs for? Yeah, a lot of people use FVGs for TTOs. I've seen that because you could, like right here, this technically is the setup, but to us as straters, we'd also just see this as like a TTO because it's a pullback into a FVG. So yeah, it's kind of the same thing. But I especially like them, you know, for I guess reverse TTO. Like when I see price pulling into a higher time frame FVG, especially if I'm trying to play puts, I'm like usually filling my order as we're going up. and waiting for like the very first red candle I see, or like an entry that's good. So I'll use like the fib levels and try and get the OTE entry. What time frame do you set the FVG? I just have it on auto. Do order blocks indicate a bigger move? Since more, yes, they indicate usually a bigger move, and usually like an explosive move. So that's another thing that they talk about, which is true too. I forgot to mention, is usually when we reach into like lows, you see like a more aggressive move, and that can be usually a hint that we're kind of changing the trend. So you see price like aggressively reach over the highs, which is also the concept of displacement. Are you using the midnight open with the, I'm using the London, because the Asia session is like right after. Did you draw your BFs off the day's highs and lows? Already answered that. How you know it won't break it? It won't break what? Also, how far back do you go with your BFs? Me personally, if I'm like intraday trading, I'll have my current, but technically BFs exist forever. So a lot of, I don't know if it's this layout, but some of my layouts, you'll see BFs from like a year or so ago, you know, way out. I just kind of like to keep my charts neat, so you can't really tell, but there's BFs within BFs that are always happening. Literally like thousands of them. How far back do you, oh no. What's your OTE fib? So the fib settings for the OTE are 0.62, between 0.62 and 0.79. There's also the 0.5, but usually you expect a reach between these levels. So this is my fib. I have mine on decimal because I don't like, and I have it unfilled because like I said, I don't like a lot of stuff on my chart. So I don't like the standard fib that's colorful. Oh, another thing too I use is the discount premium area. That helps me a lot too. So if you ever see this box right here, this green and red one, I'm using it to measure discount and premium area. There's two ways you can make it. You could use like the risk reward box. That's what I was doing at first. But you kind of have to like measure it out. But then I found out you can actually use, it's called the GAN Box, and it will do it for you instantly. So I'll use the discount and premium area a lot. That helps me a lot. And the main concept is when you're in premium, which is the high, you want to be looking to go short. And when you're in discount, you want to be looking to go long. Oh, how do you know it won't break the FVG when it pulls back in when you're front? So like as I'm loading my order, I'm not feeling it until I see a rejection inside of the FVG. So I'm not like, just because it starts pulling in, I'm not instantly buying. I'm usually, as we're going into the FVG, I'll look for like a level where I see, especially if there's like liquidity. So like right here was a high, right? Into this major FVG. You wouldn't technically have known it was going to reverse at first during this day. But as we see rejection, I might use like a strat combo down. But here, this next day, when I see, okay, we pull into this FVG, boom, we actually break through it, but then we fall through and reject. This is where I'm more confident, especially when we go through an FVG, because what happens too, we can push all the way through and like mitigate an FVG and then come back down through it and aggressively fall through. So I'll take a lot of plays off like that off of smaller FVGs. Is that, yeah, it's the FVG indicator by Nephew Sam. When setting a stop loss, do you base it off a percentage? Yeah, I do both. At first, I wasn't using a hard, but lately, especially since I've been getting these entries so tight and playing SPX more, and the SPX, the contracts are just so volatile. I had noticed there was times I wasn't really wrong, but the stop, even though my stop wasn't wrong in the chart, I was just down so much, like 30, 50%, because of course, if you're playing OTEs, the theta kicks up in the day. So like me, I try to set my stops super tight now, especially off an entry. So like you'll see like, here's my entry, there's my stop. That's like 1 5-minute candle, you know. Or sometimes my stop, like right here, this ad I was showing people yesterday, this entry was technically off the 1 minute. And realistically, my stop was gonna be this candle right here up to this high. And I was targeting, you guys can't see it, but I had a level down here. It was like a yellow level, but this was pretty much the low I was targeting. So I'll do that to have like a really tight risk reward. So sometimes you will see me get in and out a few times. But yeah, I like to keep my stop tight. And then as I start falling down, I'll kind of like adjust my stop with it. And then on my broker, like I have like a 10% stop. I've been lately adjusting my stop to like break even and then to trailing after. So I'll have it like trail by a certain amount. And then, but as we're going down, I'm moving my stop even on the chart. Like I'll have an area. That's what has been helping me stay in longer. Like I'll just be, as we're pulling down, have my stop lagging price. Because I know price is gonna, as I'm in short, you know, like here, price is gonna tend to bounce up a little. So I kind of make room, but off the entry is when you want your stop the tightest. Because in my opinion, like that's when it's most critical, because usually if you have your entry and it breaks your stop, that just means you're wrong. Versus like here, price is technically going in my direction. It just needs to, you know, work itself out. How do you hide? Oh, hold on. Let me, okay. Sometimes I set mine at like 10 or 15 shit, but it always throws me out there. And yeah, then ends up going in your direction. Yeah, I'd say like maybe 50. I tell people like 20% max, but a lot of it too, you just need to work on your entries and being more patient, in my opinion. Because I feel like 30%, in my opinion, is just too much, especially unless you have like a really high win rate. Like if you have a 30%, 40% stop, you can lose a lot. So I feel like it's more about being patient and waiting, or sometimes getting stopped out and then getting right back in. I've done that too. The discount box again. Oh, it's the it's called the GAN box. So it's in TradingView. I don't know if Thinkorswim really has one, but it's just based off the high and low area and the 50% level of it. So like above the 50% level would be considered premium, and below is discount. Like to the you know, the insiders, that's where they want to take their buys and sells, because they consider like discount to be cheaper and premium to be more expensive. And then here's the settings for the box if you want to, if you guys need them. Let me see, I can open the settings on it. There we go. So boom, 0.51. And then my background is that, and then use one color. And then I think I have my colors, yeah, red and green. Boom. All right. How do you hide and unhide the BFs? Oh, just like this. Yeah, a lot of people don't, I mean, lately I haven't even been hiding, I just haven't been drawing as many, but for a while I was hiding my BFs like this. I didn't want people to see where I put them, so. I like doing that, it's funny. And then yeah, you just unhide them through here. Boom. So the object tree shows you all the drawings. So you see like mine is huge because it's drawings from like, since I started trading pretty much. There's drawings like from like a year or two ago, almost just stuck there. And then you can always hide all your drawings with this button. And I can just give you a blank chart. And if you right click, you can remove all your drawings from forever, but don't do that, obviously. Yeah, yep, that's like your own 50%. So yeah, you could also just use a fib level and do it like you just use the fib. And that's what I used to do. I used to just put a fib over it, which some people do. Does a break construction happen before? Yes, because a break construction, like I said, is just, you're in an uptrend and these are kind of just pullbacks that break the highs and continue up. versus a change of characters where it changes you from a bullish leg to a bearish leg. How do you drag your stop and trail on the chart? Are you talking about like this? Because this is just because this was just a drawing. That's what you're talking about. So I just clicked it and dragged it while I am in the trade. Oh, I think when I'm talking about trailing stop, I'm talking about like you go into your broker and once you're in profit, it asks you to close, and you can set your close to a trail stop. So you can have it trail 10%, 20%, which is really useful because like, I mean, even me, I know everybody's guilty. How many times have you been in a trade and you're up 30%, 50%, 80, 100, 200, you know, 3, 4, 600, whatever. And you're looking at it, you know, and it's going down and you're excited. And then you're like, I should sell, but you never sell. And then it hits a level like this and boom. I mean, this happened to me. You know, I ended up selling like here, but you know, from here to here, especially with theta, that could have ate hundreds of %. But if you have your stop to trail, it's gonna just market sell for you. So like once you're up a certain percentage, I'll highly recommend it. Or you can set your, like some people I know, they'll just set their stop to like 100% profit. So they'll go in and look and see what they paid, and they'll, you know, set their bid and ask for their stop sell to 100% of that. Or some people will have it trail, like, you know, like, hey, let it trail 20% or 10%. So pretty much what is happening as it's going, when it pulls back that percentage, it's going to auto sell. So it kind of helps people who are more nervous stay in longer. Like me, I don't have a problem staying in. Some people do. I have a problem getting out. How tight are stops? Super tight, like this one. This stop, which I was showing people yesterday, this created a risk reward technically of it's like a 1 to 24. I didn't notice it at the time. I don't even know why. I think it was because of the FVG. I don't know what made me take this ad at the time, but I was like telling myself like this is the area where I'm wrong at with this target. So yeah, I think a 25. Or at the time, I think it was like a 24. But I will. That's why you'll hear me sometimes say like, "No, I'm not gonna take it." Like, where's it going? Because like a lot of times, I'll see people forcing trades in range like this, which is cool, but it's like, what are you really targeting? In my opinion, at least, because like you get long, like I don't know, here, and you can maybe target the FVG, but then it's like, where's your stop gonna be, depending on where you go. Like, your stop is like these lows. It's like your risk reward isn't the greatest in my opinion. So I try to think about that regardless of like what my stop is on my broker. I'm thinking about it like as a trade, like here is where I'm trying to get short at, because I'm like, this is a high a day. So that's why you'll see me. Sometimes my entry looks off or random because I'll just watch it, consolidation at the high a day. And I don't know, once you look at charts for a long time, like to me, this just looks like a roller coaster, as weird as that sounds. Like, so I'll watch this and I can just instantly tell like, oh yeah, we're about to sell off. And then dump them off. So you'll see me sometimes like just rush in because I know I'm like running late, but I'll, like I said, I'll watch the consolidation and expect to move because price is going to, you know, accumulate and consolidate before it aggressively moves to an imbalance, and then do the same thing over and over. Consolidate, aggressive. I mean, if you just look at it, that's how price moves. Consolidation, aggressive move, consolidation, aggressive move, consolidation, aggressive move, consolidation. So I'll just kind of watch the consolidation a lot. How might be how far out the money are you going on your 0-day SPXs? It depends. If it's like start of the day, you can get lucky and buy some of these, which I've tried in the past. Like here, I think here the 3600s were like 21 cents, and at the end of the day, like $21. But on days where you don't have an aggressive move, they're just gonna get cooked by theta. So like at the start of the day, I'm not much far out the money. Like the day I hit in the morning, I was only like a few, like 3 or 4 out the money. But in the day is where I'll be out the money, but I'm expecting an aggressive move. And I really don't have a set amount. I just have like more of a dollar amount per contract. I know in my head as crazy as that sounds, like where I'm like, okay, you know, if we're here, what are we at? You know, what is this? 3,600, 3,610. And I expect us to get to, you know, 35,900. I might buy, you know, some 35,700, something that is close to either getting in the money or something that will be in the money. But I know you're only a few strikes from being totally worth. It's like a sweet zone of like 3 to 4 strikes, in my opinion. Do you stay in heavy or you scale out? What do you mean? You stay in heavy or you do scale out at a certain percentage? Are you talking about position size or percentage or entries or exits? A lot of times I'll scale in too, depending on the day. So if it's like a strong trending day where it's obvious, like you'll see me take multiple scale ins, but a lot of times I'll be closing too. Like I might short here and close and then be buying here. But kind of like how FICO does it, I want to start doing, you could technically just be rolling your contracts over too. So it's kind of like selling them for you. But depends on how you trade, because some people will just load up a full position here and then sell on the way down, versus some people average in. So it kind of just depends on you, in my opinion. Yeah. The roll, I'm not an expert on it. You have to ask FICO, which he's having a live tonight. But realistically, it's like the concept of you could like roll them forward, which is like it buys more time and it sells your current contracts and collects the profit, or you can roll them up or down. So like when you're in puts and it's letting you buy the strike below while selling yours. So kind of like, I guess if you were at 367, you would sell yours for your profit and then be buying at 365. So it's like you're locking in a portion of the profit. That way, if it, you know, reverses like here, you still made profit on the way down as it reversed. Or because some people will, you know, newer traders really, like nobody experienced should be doing this, but there are people who will literally buy puts down here and watch it come all the way up to here. In my opinion, if you do that, you need your ass whooped. But yeah, don't do that. So I don't, like, sometimes people tell me that, I'm just like, how did you watch price reverse $10 the inch? But that's why it's good to always have a level of invalidation on the chart. Like this was an easy play. So for me, like gaps are your biggest opportunities because you're gonna see the most aggressive movement off gaps. So this was, I took this entry that day off the 1 minute. The moment I saw the first failure and red candle, there was my stop. And I was just like, I'm just gonna wait. And if I see any candle come above, I'll stop myself out, but I didn't. Yeah, even if I, you know what I mean, I prefer to wait a little bit of time. But even like on the 5 minute, the entry was still down here. So it's still a 5 minute down, and the 15 would have been like down here. When do you use the Strat Rev entry? A lot of times my entries lately have been ICT entries, but I'll have like a Strat setup. So like right here, I had a 2230 I was expecting, but I kind of took an ICT entry technically before the Strat entry. So, but I'll still have my multiple time frames too. So like as I have that, I'll have my 30, you know, 30, my hour, day, and I'm constantly looking. So boom. So we had a 2 up, 2 down, but the entry wouldn't have been until way down here per the Strat. So I could have technically used, you know, like a 15 or 5-er, but I'm just kind of with ICT, I'm just so used to operating on micros and looking for the consolidation break now that I'll just take my entry with a tight stop. And it's like I'm trading the momentum, I guess, the reversal and the momentum. ICT entries, it depends. Like I'm still taking my entries and using my Strat 30-hour daily targets. But like entries like here, realistically, especially on SPX, you would have to get out or you're gonna get cooked by theta. So you'd only get a few candles, but I mean, especially on SPX, these 4 or 5 candles would be enough to be well over 100%, even on SPY. That'd be a $2 move. So I'll still use ICT entries, but like kind of like Strat targets. But if it's a choppy day, then sometimes I have to just stay scalping. But I'm to the point now, like if the day is too choppy, I just get tired. I'm just like, yeah, I'm good. I'll just not trade it. yeah, just kind of wait. Like I just like to be patient. Buy side liquidity and sell side liquidity. That's where the liquidity is on the highs and lows. Yeah, price will reject, and I don't treat them like BFs. Usually our BF is going to be right above the buy side liquidity, like here. So like most of the time, I mean all the time, our BF fits in because a BF technically is like the higher high, price expansion. So, yep. Any more questions? I feel like I answered them all. Cool. All right, y'all. I'm about to let True to the Strat take over on this, and he's about to do the second half. He's gonna be charting the sectors. So True, you could unmute and introduce yourself if you want.
Yes, sir. My name is True, formerly known as True to the STRAT. And basically what I'm gonna be doing today is I'm gonna be doing like an overview of the market. As you already know, we are going into the new quarter and we are going into the new month. So I'm gonna see if I'm gonna chart up some quarterly and some monthly setups and see what catches our eye. Because I ain't chart